of the Fariport Industrial Development Agency to order and ask if there is any public comment. And hearing none, we'll move on to approval of the April 21st, 2025 meeting minutes.
I will move approval.
I'll second.
Any corrections or questions? All in favor?
Aye.
Aye.
Okay, moving right into financials. Start with resolution 2025-05, authorizing payment of the IDA bills. Have those on the
So I
table.
reviewed the journal entries and the bills, and you have a summary of the bills. And I make a motion to approve their payment.
Okay.
I'll second that motion.
Any questions regarding any of those bills? All in favor?
Aye.
All right. So we have cash balances and financials. This is part of the package we received. We have nothing on any of those. Jonna, anything to call out on that?
No, I thought maybe on the cash investments page, I thought maybe we could discuss tomorrow night some of those set-asides.
Yes,
Yep.
that's a good idea.
I did add to the agenda, which you have in the supplemental materials for tomorrow, a discussion on our 2025-2026 budget, our capital plan, and acquisition targets to talk about what we can do with some of those dollars then.
Okay. Any other comments or questions on any of those? All right. So we'll have an investor report from Tompkins. Megan and Eric are here. So come on up.
Perfect. And where would you like us? So,
You could be right at the podium.
perfect.
Yeah, we're
We're
live streaming, so.
My name is Megan Burke from Tompkins Wealth Advisors, and I am here with my colleague Mike Lawhead, who sits on our investment committee. He's our senior portfolio manager, and he's put together a market update that I'm going to defer to him.
Sorry, Mike, I called you Eric.
No worries at all. I've been called worse. So a few just kind of general market comments, but if there's anything that's more specific and helpful, please don't hesitate to ask questions, and would like to, of course, make this as helpful as possible for you guys. But on the second page, just some general fixed income market updates. The chart in the top right shows that credit spreads remain near record lows, and so very little broader credit risk throughout the economy is been a staple for much of the last number of years. The last 2 years in particular, with very, very low credit spreads. We really haven't seen an extended period of credit concerns going back to the years shortly after the 2008 financial crisis. 2020 obviously being a very short instance, but when we think about broader markets, the main challenge, especially for fixed income or bond issuers, is around the long-term treasury yields. Long-term treasury yields remain challenged for a couple of reasons, but the main driver of this has been about 40% of all U.S. Treasury debt is coming due within the next 24 months, and so as a result, whichever administration was coming in at the start of this calendar year was faced with this challenge, and so issuing or reissuing 40% of the Treasury debt amidst any potential spending bills that come through down the line. It's about $10 trillion in Treasury debt that it is getting issued. And so with that magnitude of issuance, long-term treasury interest or long-term interest rates going out 10 years and 30 years is just the benchmark terms, continues to be, it just bounces higher every time there's a long-term bond that's issued. And that's specific to the U.S. Treasury bonds in particular. So that is a challenge, if not maybe the most important challenge in our view, relating to broader fixed income markets. And I'll kind of revert back to that a little bit. But the chart in the bottom left also, it just illustrates that high yield, or so thinking of it from the investor stance, the duration investment, so longer duration has continued to be a weaker investment. And so if you're an issuer, as an issuer, terming out your debt as long as you possibly can to avoid any potential volatility around higher credit costs in this instance of treasury issuance has been the right move in the last 2 years, 3 years or so. Flipping to the next page, I'll get through these next ones a little more quickly. But this chart shows how the Fed, going back to 2024, started to lower the Fed funds rate, and one of the reasons being that the cost of interest, so that the interest expense is very high as it approaches 5%. And every time they were issuing a 10-year bond, it was bouncing up against 5% going back to 2024. And to lower the interest expense on short-term debt, thinking that rates would move lower, they were only issuing short-term debt. So that's the reason why there's so much debt that's piled up here in the next 18 months coming due. It's because they were issuing where it was the most affordable, which is the short-term bonds. And all while the dark green number shows that the 10-year Treasury yield has remained elevated above 4% for the better part of the last 2.5 years or so. I'll jump to page 5. And so one of the dynamics across markets is that as the Fed raised interest rates, that actually had a inverse impact to profitability for corporations, and I think of that in a similar context to credit spreads. So corporations, as rates were at low levels, thinking 2 to 3% in the early years shortly after the pandemic, most corporations termed out their debt for as long as they possibly could, and so their interest expenses rates increased, did not go up, and actually because their deposits were earning something above zero, which was the case pre-pandemic, their net interest expense across the S&P 500, just as a barometer, had actually come down because they were earning interest on cash value or on cash reserves. And so this dynamic now that the Fed is weighing is that as they take rates lower, there's actually a profit decrease that results from that. And so with that, some just more uncertainty around credit spreads is a possibility that we continue to monitor. The magnitude of it, again, this is interest or profits earned on cash reserves, so it's not enormous, but just the directional increase is something to keep in mind, especially as with how interconnected the cost of credit is from any borrower's perspective. It is worth mentioning. Slide 6 shows a different way to look at inflation. So inflation and interest rates, of course, having a very close relationship. But one of the ways that the kind of year-over-year CPI measurement doesn't get characterized as vividly is that when we look at it on a cumulative basis, we see the long-term trend here of inflation increase and how there was a hockey stick that appeared in the 2021-2022 timeframe and has continued pretty much ever since. And so traditionally, when we think of how do we get back to a normalized run rate of inflation, and with that, a normalized interest rate environment, possibly, that would just traditionally speaking, coincide with some deflation out there. Obviously, deflation isn't a conversation piece anywhere throughout the financial medias, but at the same time, we've seen the year-over-year numbers continue to move lower in the last couple CPI prints, and we actually have oil prices that have moved below $60 just in the last couple of weeks for the first time in a number of years. So how much deflation while also avoiding recessions, that is a very fine line. Prolonged deflationary periods are recessions, just generally throughout history, as shown in these gray lines or gray shadows on this chart. But all in all, the direction of travel for inflation continuing to move back towards a more normal run rate would be a benefit for borrowers and issuers alike to not, of course, be competing with the higher cost for everything that we consume out there. Next page is tariffs. I'll actually skip that one for the moment. I'm happy to come back to it. But the next couple charts actually are the inflation year-over-year numbers, as well as the oil price chart on page 9. Just since we were on those topics, I forgot to point those out while we're there. And then actually on page 10, specifically within municipal bond markets, as an asset class has underperformed the other fixed income asset classes to start the year of 2025. Municipal issuance has increased by 15%. Just in the first quarter, or compared to the first quarter of 2024, the first quarter of 2025 was 15% above the record issuance of the first quarter in 24. The underperformance from the investor stance on municipal bonds, largely due to the historic amount of issuance that continues to come to market for municipals. Demand for municipal bonds has remained very high, very elevated. There's some seasonality within your market or within the municipal market that as tax bills come due, traditionally taxable investors will liquidate some municipal bonds to pay taxes, and that does tend to normalize throughout from year to year. But the end of Q1 and into Q2, we do tend to see that fairly typically. So the seasonal dynamics now behind us. It's some improved clarity, and I'll say this is the kind of never-ending caveat, clarity around state and federal aid packages and politicians being productive in providing transparent budgets. I know there's plenty of challenges out there, but any transparency from the federal administration then leading to more clarity around what funding would need to come from a state or municipal level. That's the clarity that I'm speaking to. Just more the current administration's just questions around how much of the federal aid is going to be there, and if there is any gap with the budget, how much do states and local municipalities need to come back and fill themselves versus may or may not see reductions from federal aid. That is an open question mark. I'm not here to of course, provide too much guidance on what to expect there. But all in all, the municipal markets, from the demand, from the investor's perspective, we continue to see a very elevated level of municipal investment appetite. That hasn't changed. So I'll pause there, see if there's any questions or anything that's maybe more helpful than some of the first few comments here. But
Mike, so thinking about a portfolio like ours, it's investments like this are a little bit outside of my expertise. So I'm just curious, when you think about advice you would give our organization with our investment portfolio stack with you, we're having a planning meeting tomorrow night. Are there 2 or 3 things you would have us discuss, or 2 or 3 things that you would have us think about when you think about the current state and trying to do whatever we can to grow our portfolio?
Considering our limitations that we have as an agency.
Sure, and I think the majority of the answer there comes back to objective and how to growing a principal value above inflation has been extremely challenging with how pervasive inflation has been for the last number of years. So if there's any increase or appetite or ability to invest, I'll say in some higher yielding and in no way, shape, or form moving out to the riskiest ends of the spectrum, but increased appetite for whether it's corporate credits, as well as if there's high quality kind of blue chip equity exposures that can be better stewards of the inflation that we experience from a spending standpoint. That is really the only kind of advice that I can think of, is how do we continue to find different investment opportunities that not only keep pace with inflation, but also earn some incremental return above and beyond that. That's been the challenge with rates at, thinking of treasury rates in the ballpark of 4%. If inflation is now back to, let's say, 2%, continuing towards a more normal run rate down the road, a 2% real return with pretty low risk in the U.S. Treasury, and short duration U.S. Treasury in particular, that is a real return and can be helpful. Granted, we're all consumers and institutions alike are digesting this inflation over the last number of years, which hasn't been easy. So a little bit of a nuanced answer there, but any ability to to invest with some credit spread that would be helpful to earn something above what's available in treasuries, but at the same time, treasuries are not a bad place to be.
And specific to your portfolio being limited, that we are limited to the treasuries, we've done the shorter term yields, which thankfully after 2022, we started to generate some more income. So the plus side of it was additional earned income. But with the limitations that we have on the portfolio, the best we can do is just try to look at time frames.
Mm-hmm.
And right now, the shorter terms have been yielding higher. The report that I just had handed out gives a little bit more specific information relative to your investment portfolio. So on the first page, what's helpful here is the yield to maturity. So just seeing the yield to maturity, it's good to see the 4.41%, the 4%, the 4.38%. Those are more decent yields than where we were looking at, say, even 5 years ago. So part of it's that. The other sort of what we were able to do better in years past was try to spread out so that each of the time frames, 1 to 5, 1 to 3 years, 3 to 7 years, 7+, we had different dollar amounts in the different buckets to try to capture some of the higher yields, but then also trying to balance it with cash flow needs. Now, just with where the markets have been, where treasuries have been, it's more heavily on the short-term yields. And the visual of the lower right-hand corner shows that the majority, 80% of the treasuries are going to mature in the next year. So we are limited there. And then the ones that are beyond a year mature in 26 and 27. But that's something that we actively look at based on inventory and just where the treasuries are as the different treasuries mature.
Does that influence on page 2 the estimated annual income declining over?
Correct.
Okay.
Yeah, it's just a visual, and it's basically you're seeing the 2025 income so high because that's where the treasuries are in the portfolio currently, and then and maturing at 25. So and then pages 3 and 4 are just the current holdings. They're all treasuries. If there is any little bit of money accrued in the money market's yielding 4%. The yields with how they look on the holdings pages for the treasuries themselves get a little confusing. So that's why that first report, the first page on the report where it shows the consolidated yield to maturities is more helpful. And then the last page on the report, we converted to a new platform in 2023. And this account converted to the current platform December of 23. So that's where the last page shows the history year over year and will continue forward. But it's basically the net contributions when we added to the portfolio was just under the 900,000. And you could see the income earned. So the income from the treasuries last year was $11,217.94. Net contributions is or withdrawals is, I don't believe we added any money to the portfolio, but that would have been any money sent back. Traditionally, if there's CDs that are at the bank, looking at what those rates are, comparing them to treasuries, and then determining with cash flow. So, and then the market appreciation is just the value on the treasuries being up. And then this shows for the year to date for 2025, the income earned on the treasuries so far, and then slight depreciation. And unfortunately, the returns on this portfolio have never been too exciting. But it is what it is. So,
Or fortunately, depending on how you want to look at that.
Yeah.
so coupled with Mike's report, which was more higher level, market update in general, this just provides some more specific information for your account. And if you have any questions, otherwise, John has been a great addition. I've enjoyed working with her, so
Good.
it was a nice, smooth transition. So
Awesome.
That's great.
Thank you, guys.
thank you so much. Have a good rest of the evening.
Thank
Anyone
you.
else have any questions for the team? Great, thank you.
Thank you so much.
Thank you, Laura.
Okay.
Thank you, take care.
All right. It's financials, old business on the agenda is wildlife management at Thomas Creek Wetlands.
Yeah, so in our last meeting, we talked about some steps we could take to mitigate the issues with the feral cats. I have been coordinating with the village. Jason is helping with the signs. We've been in touch with DEC on the guidelines for what the posting should say. I did reach out to Rock Cats and have been in touch with Brian and Emily Mischler on the village side, because the feral cat issue, I guess, is kind of two things, right? We have the wetlands and we want to deal with that directly here. But there's a bigger issue, but the same issue for the village. So we're doing our best to kind of coordinate our messaging and approach to help both issues. But our focus is mainly on the wetlands. How do we make sure that that ecosystem is protected? And we're focusing on that between signage and coordination with DEC, and the local PD will also do some enforcement once we have that sorted out.
What did DEC say about enforcement? I know that we talked a month ago. They said they would handle that. Are they still on board with that
Yes.
approach?
Yes, so they gave us some specific guidelines as to what the signs have to say, where they need to be posted, what the spacing of those postings need
So
to
that makes it
be.
enforceable?
Yes.
What these guidelines?
Yes.
Gives them notice or whatever.
Right, what exactly does it mean to post your property, and what does the language have to say? Where do the postings need to be and how
Right.
many? So they provided us that guidance. And then once we meet those guidelines, then they will consider that a posted area that they will provide enforcement for.
Is the village talking about any kind of local ordinance?
I
What are their
haven't
tools?
heard that, I haven't heard that from the village.
I could take it back and ask, I don't know that there's anything that's really enforceable. Because they're not necessarily on village property. You know, it's a moving target. But I'll bring it back and talk to Brian about it.
Yeah, I mean, I'm just asking the question
Yeah.
whether
I don't know
that
if
is an
there's
approach.
anything
I'm not
that's-
suggesting that they do, but I'm
Yeah.
just curious.
I'll ask that question. I don't know that there's any.
Yeah, but even if it's not on village property, I mean, chickens are regulated, on private property.
Yeah,
Limit the number of cats. I thought I wanted to do that. I mean, because some families have lots of cats and treat them well.
And some people don't have house cats, and that's fine
That's
too.
right.
Not necessarily feral. I'm glad you have to deal with that instead of us. We can put up signs. We're good.
right.
Yeah.
We can talk about agricultural uses and animals in the village from that standpoint, because they're not household
Yeah.
animals. The limitation of how many pets you can have really falls under the town of Barrington. If you think about the licensure that you have to do for dogs, that regulation, I believe, falls with the town of Barrington and the
Animal
animal control.
All right.
So, but I'll bring it up and see if there's anything that we can do.
What does DEC enforcement actually entail? I mean, are they?
They will, if we say that someone is trespassing there, an officer will come and issue a ticket, or if the person, I guess, escalates, maybe actually trespass and arrest. I don't know if trespassing is arrest now or just a ticket again. But they will treat it like any other crime and enforce that it's an illegal activity to leave a cat house or to feed animals there. So they also are willing to help with trail cam monitoring.
That's great, yeah.
And so that's really the way that they are able to monitor what's happening. They can see it happening and then go and respond to deal with the offenders.
Great.
Okay, any more questions or discussion on that? All right, any other old business? New business? Okay.
I do have new business. I just wanted to update since we're in the IDA. In several years ago, when we lost Donna Yaman, the IDA established a high school scholarship for a high school senior, in her memory. And in years past, we've had several winners. However, this year we do not have recipient of the scholarship because there is no one who met the criteria of the scholarship. We established it with a community service requirement within the village bounds, and I think that is, then the Dollars for Scholars folks suspected that 10-hour requirement within the village bounds versus anywhere in the community, which of course is much broader.
Now, it doesn't have to be a village resident to receive this, correct?
I don't believe so.
Yeah, Leslie, if you could forward that to us all as a board so we can look at those ourselves.
Yeah. Let's see, I typed it up here. The applicant must have performed a minimum of 10 hours of community service within the village in the last 12 months. There needs to be a beneficiary letter and recommendation acknowledging the community service, of course, as well, and a short essay on how community service and leadership experience have taught me to be a more compassionate leader in the Fariport community.
So no residency required.
That's not what, yes, that's the criteria.
And that's not limited to Fairport High School, is that correct? The private schools?
As long as they live in the community, yeah, in the Fairport School District bounds. So yes, a Mercy student or, could receive that. So this year, as the students enter the Dollars for Scholarship information and all their activities and all that sort of stuff, the program kind of pops up the different scholarships that they could be eligible based on the information that you've entered, and apparently nobody met our requirements. So all high school juniors should be paying attention to this right now.
Right. How much do they have?
The scholarship is for $1,000
Wow.
1 year. Yeah.
Is it the volunteer requirement in the village? You think that was maybe the restrictive thing?
It's possible.
Could we provide the volunteer opportunity, or is that like stacking the deck?
Well, I think
Because
part of
wouldn't it be great for someone to volunteer to like clean up trash in the wetlands or do like
Well, those
pick up along the
opportunities exist.
canal?
Lots of organizations do cleanups. I mean, the Scouts will clean up. We had the cleanup day every year that centers around the canal.
There's
And, like, there's
festivals
also-
that occur. There's
Right.
festivals that occur that are always looking for
And
volunteers.
there's also an expectation of leadership on their part. And if we're handing it the opportunity to them, I mean, there's a little bit of, I think, personally entrepreneurial spirit
And it-
involved.
Is this the first year that we have not had a recipient? Is that correct?
Is it OCED provides the scholarship? Is that us?
Yes. it's-
Okay.
It's the Donna Yaman Fairport Industrial Development
Oh, cool.
Agency Memorial Scholarship.
Oh, very well.
So we
So, yeah,
established this a while
I
ago.
wouldn't be quick to have a knee-jerk reaction to 1 year that we don't. It's been successful so far.
I think maybe next fall, we should put something out about the scholarship
Oh, yeah.
available. Now's the time,
That's a good
you know. And the service just has to be anywhere in the village, so they could be volunteering at the library or,
Which I think a lot of our kids actually have come from, if I'm not mistaken, the library.
Right, and it makes sense to let them know about the scholarship so that they can then be
Mhm.
industrious on their own to find the opportunity, but knowing that that's a qualification they would have to fill ahead of time. Like you said, it's great.
it's like one of those catch-22s, like the kids get I think the dollars for scholarship applications open up sometime around Thanksgiving, November, and then they're due at the end of January. So it gives them like 2 or 3 months to actually
Right.
pull it together.
Yeah.
Because I sat on that board and also, you know, endured 2 kids trying to complete them all. And, but, you know, like within that 3 months, of course, you know, if they haven't done this community service,
Yeah,
it's
that's a
hard
tough one.
to scramble and get 10 hours in the winter time,
Yes.
you know, so they have to actually be planning now.
Mm-hmm.
Maybe that's something, maybe it's something that we position, because how, right now as it is, that announcement goes out in November-ish,
The scholarships?
Yeah.
Yeah, all the
The
lists of
opportunities that are listed.
Yes.
maybe we position it sooner on our social media.
Right.
As an opportunity for an aspiring community leader to consider over the summer.
Right, so they have time to hit those months of,
That's right, sunny days. to-
Right, the
Yeah.
summer month volunteer.
One might assume that these kids would be, if they were committed to being a community leader, would be serving us on a regular basis, not just their senior year. But that's just me.
just saying.
No better time to
We
start
set a
than
low
right now.
bar, nobody's met it.
All right, Girl Scouts and Boy Scouts out there,
Let's go.
let's go.
Oh, that's
Okay,
interesting.
well, thanks for that update,
Yep.
Leslie, and we'll just have to keep that on our radar. Any other new business?
What's the age group on that? Is it
High school seniors.
High school seniors. Oh,
Yeah.
that's right.
Okay, I'll take a motion to adjourn.
So
I'll second.
All in favor?
Aye.
Aye. Okay, we are going to jump to urban renewal. Organize my file.
You wearing new glasses?
I'm wearing glasses.
Oh, well, I like them. Okay,
Oh,
something looks
thanks.
different.
Yeah, I don't have contacts today. Yesterday. Guess I could use yesterday's.
I don't think that changed. You're tense. Just random.
Okay, so I will call the May 19th, 2025 meeting of the Fariport Urban Renewal Agency together. Ask if there's any public comment. Seeing none, I will move on to, I'll close public comment. We'll move on to the approval of the April 21st, 2025 meeting minutes which we received today. Is there a motion to approve?
Move approval.
second,
Corrections or discussion? All in favor?
Aye.
Aye. Going into financials, start with resolution 2025 authorizing payment of the urban renewal bills.
So I reviewed the bills and the journal entries. And I make a motion to approve.
second that.
Any questions or anything you need to call out on those? All in favor?
Aye.
Next is resolution 2025-05 authorizing payment of the section 8 bills.
So I reviewed section 8 journal entries and the bills, and I make a motion to approve their payment.
I'll second.
Any questions on any of that? All in favor?
Aye.
Aye. Okay. Cash balances and financials.
Just want to make a note about financials for Section 8 specifically. If you might recall, in our last meeting, we had a systems issue and we didn't get an updated P&L and balance sheet for the quarter for Section 8. So that's why you have that included in this packet. So we reviewed that and approved the preliminary in the last meeting, but we wanted to provide the actual final, and that's what you have here. And then the other thing I would mention, not to preempt anything Ms. Sturgis might want to share about it, don't look nervous, is from a cash balance perspective, the Section 8 has a lot of cash. And as we go into budgeting, we're going to be talking about the best use of those dollars to make sure that we do get to use them and we get to use them in a way that is most impactful to the agency. And we don't leave them at risk for potential changes or clawback. So that's something we want to be thinking about and have some discussion about tomorrow in our planning meeting. Anything else, Jen?
Not on that front, no.
Okay, thanks.
Okay, loan status. $100 out there in the pass-through column.
So this is a same user. You might see them once in a while. When our board meeting is a little bit earlier in the month, their loan payment is a little late, and then when it's later, it's fine. So this is really just a timing of that one payment.
Okay, front porch grant summary.
We don't have any updates, but we have had some new inquiries.
Oh.
So we're starting
Inquiries or
to see
actual applications.
no actual applications have come yet, but I expect to have some coming in soon.
Right.
It's a popular program. So it should be interesting. All right. And the housing report. Jennifer?
So, we are, as you can see, the first page, we're definitely declining, which is what we wanted to do on purpose. So we're getting down there. We lost 5 again, and that is going to put us in a better position for this upcoming year. We'll stay on track with our funding a little better. We're, in fact, on the front of my report or my narrative, I was talking about shortfall, the first paragraph, and that is, we did have a long period of shortfall last year. This year, we're so on the fence, like we're just teetering. So we were briefly in shortfall during March, but released into the month of April, which is very successful. Right now, we are, once I balanced my books from for the past couple months, we're definitely, I need to put in what's called an HHR, which is a HUD held reserve request, so that I can be made whole again, as we're negative 17,000 in our RMP. That's fine to do. I have to request that back out. So if you're looking at the front, you're seeing a negative balance, I will be requesting those funds. It's HUD is going, which is actually part of my other narrative, is HUD is going through an extreme change in several things, one of which is a programmatic thing called HOTMA. It is a new regulation, and I've talked about it before. With HOTMA becomes an entire new transition to a different software platform that my software company has to, well, I'll get there in a minute, but they're going, I'll get there down at the software piece. What I'm trying to say is that HUD is going through a serious change in the way we communicate with them online. So one of the facets of that is how we ask for our reserve money. There's a new software system. I did go to a training online the other day. I think I understand it a little better now, and so I can ask for those funds, and that's why they weren't requested before. Is HUD's
making a lot of changes that have nothing to do with the recent administration change. These were on for many years ago. So we knew that this was coming, but because of that, I wasn't exactly clear about how to request that balance. So I will be doing that by next month, as I now know how. We still have 580 families on the waiting list. Now that we're really out of shortfall, I'm doing a lot better with our budget, or we're on track with our budget to not be in shortfall. We did issue only 2 vouchers this month. It's so small, but they'll be successful lease up, so we'll have those sort of like our test run. Our pipeline is a little bit dry, as you know, that takes a while to fill, or get flowing again. So by the end of the month, we're going to canvass at least 10 individuals and hope that 6 or 7 lease up. The state of Section 8. So the most efficient, we did receive correspondence this month about HUD's, about the Trump skinny budget for 26. It is a catastrophe. It's devastating to the Section 8 program. I definitely believe it's, once I reviewed it, it looks like the HUD was the highest cut, 43% of our funding.
Wow.
That's his proposal. Now it goes through all of this stuff. So we'll see. It's devastating. What their HUD's main, what they're going to be transitioning to, or this is what the ideals are, is that they will have a block grant as opposed to this contracted funding, and it would go to the states. That's what he's proposing, is to hand Section 8 to the states and go through a block grant process, which to me means competitive, but I don't know. They just want to block grant it. These are all things in his ideas, in his budget. So we don't know any more now than I did then. I just am going to wait. I'm sorry, I didn't even give you a heads up. I put you in my board report, I'm sorry. I forwarded a call, there's a call to action from NARO. They requested that we reach out to our representatives, and they gave us talking points. So I did forward that to you, I don't know.
Yep,
Okay.
I saw it. I haven't made outreach yet, but
That's
I will.
fine. I, just because you were talking about
Yep.
it, so I forgot to talk about it. Okay.
Thank you. I appreciate you sending it to me.
Yes. So hopefully we can, be part of that movement. I don't have any indication what is actually going to happen with this funding at this point. I'm just waiting.
Is there any timeline yet?
Well, this is for 2026, so that
Okay.
we're set for, our funding actually came in the other day. So this is how far behind HUD is I just got my funding renewal for January 1st for 2026, 5. Which is higher than I thought, which is amazing because we went into shortfall. So because of that, you push that envelope farther and farther, you get more money each year. So because I pushed that envelope, we have a really great, what I think to be an ABA this year. It's 3.4 million. I thought it was going to be 3.1. So I think that's really great. I'm happy about that. So we're set for that for the year, and we'll take it as it goes. I don't know. I don't have any other information.
Yeah.
Rose Hollow, what's that? Go ahead.
Can I just ask about the funding? So it's 43, like it's like a line item, like 43% less. So it's not like vouchers are a certain percentage and admin is a certain percentage. It's just like 43%.
Yeah, that it was,
And then this whole restructuring.
I don't know if that's what they mean by skinny budget. It was just cuts. Yeah, very cut.
Okay.
And they
And
want a
then
block grant.
the whole like restructure to get to state governments is kind of another thing. Like they go together, but they.
Right. That's one of the, I am not sure how that
Yeah.
actually goes. If HUD would exist and they'd be cut at 43%, and then I don't know how that would work. If they would hand 43% of the funding to the state, I don't know.
They're talking about putting a lot under HHS. They're trying to consolidate agencies under HHS.
Yeah.
I wonder.
Well, I noticed, if anyone cares, I can send you line by line about did anyone see that budget yet? The skinny, oh, you might be.
I'd be curious.
Oh, sure, I'll throw that
Yeah,
I'm
out.
not
we
sure
were
what the
out
skinny budget is
No,
that you're
I
referring to. I mean,
know,
there's a
that's what he
budget.
calls it.
Will you send it around?
Yeah, because I'm not familiar with it either.
In the
so-
letter, it actually talks about skinny, I'm like, I don't know, I didn't look at it.
I think it's
My
based
question
on
is,
trying
is it the
to
same
address the
thing that
deficit.
they're trying to get out of the House right now?
The big beautiful budget?
The big beautiful
I think
budget, which
That's why 20
cuts SNAP and cuts Medicaid, and I would guess it probably cuts Section 8, but it sounds like it doesn't go into effect till January 1st, 2026.
Well, it's his, yeah, now we wait anxiously where everybody looks at it, reviews it, fights about it. It will never go through like as it is. It never does.
October 1st is in the fiscal year, so
October
But-
1st.
Okay, for the budget for, okay.
When they say, Jen, to do outreach with members of Congress and what about the impact, do we know, we don't really know how it's going to impact us yet, or do we? If we were to do,
I guess we should just look at it like we're getting a decrease in funding and how that would affect our families, whether it goes to the state or not.
so we know there'd be a decrease, and then how that would be the impact and how.
So to mitigate some of this, they're actually putting term limits on the Section 8 program. One of the ones that scares me a little bit is term limits. Term limits? Like,
I don't understand.
Participation limits, like how long you can be on the program?
For individuals that are on the program?
So healthy families, that would mean people who are not disabled, would have a limit of 2 years. Oh,
But that is just a proposal.
Yes!
Let's be clear, these are proposals we're talking
Right.
about.
thing.
Right. But if they want us to have action to tell Congress people to not vote for it,
I have to.
we need to know what it was to say, well, don't approve that. Right. You know what that is. Yeah.
And that's how it would affect our community.
Yeah.
In what way? I mean, because then they say, okay, this will help us, decrease the budget and help seniors, because there would be no limit on seniors.
Yep.
Or the disabled people and the disabled individuals. So it's just a shift in funding.
Mhm. And that too, that would be a tough blow, that 2 years in your experience.
Yes, I
doing
can't
this.
even imagine.
Okay.
I
Yeah.
mean, that's,
It sounds wild.
yeah. It's bad. Development of family self-sufficiency tools is another thing. They want people to become more self-sufficient, and they want us to promote that, which we should be anyway.
Right.
I will send the article. I didn't know if it would be too overwhelming, so I didn't, but I will
Yeah. Oh, that's great. Thanks.
tomorrow immediately. It's basically his ideas and what he wants to do and what the budget will be. Ugh. Okay, Rose Hollow, we are making movement, but we haven't met with this individual yet. Jonna was at another function, which was attended by the actual owner of Rose Hollow.
Mhm. The mayor
Hyman.
introduced me to him.
Pardon?
The mayor introduced me to him.
Yes.
That's great. Connections.
Good job,
I'm not a
because
quiet voice in places.
I was like,
You're not supposed to be.
amazing. So what's his first name?
His name's David,
Hyman or
David
something?
Heineman.
From what I understand, I wasn't there. He has no maybe you. can
They are
speak to it.
nursing home operators, not real estate
Oh,
developers.
that's,
They don't have a desire to take that property and redevelop it into luxury housing. They are open to the concept of project-based vouchers for all residents, not just the ones who are already in Jen's program.
Yep.
And we're going to continue that conversation to how we get there. So
It's very
it was a
reassuring.
positive
right.
Yeah,
positive,
it's awesome, yeah.
indicator
Thank
that
goodness,
yeah.
for now, we don't have to worry so much about those folks being pushed out. The real challenge will be the ones who aren't on the program, who had these historic
Right.
low rents, who may be forced with higher rents that are still within the Section 8 payment standard, but a lot more than they were paying. So
Correct.
maybe we can help them through the project-based approach. But I would have to believe they still have to be eligible.
Yep,
And-
and so it becomes a little sticky because you have to qualify these people before you actually can put them on the program. So you can develop this contract for 12 units, maybe 10 come on now because the other 2 weren't eligible at the time, but as it becomes vacant, we can fill it with eligible people. It's hard to move forward with something like this, not knowing what's coming up. It really is, and that's what I'm struggling with my 5-year plan a lot, because I'm like, it's hard, it's very hard. But I figure it's a minimal, it would only be 9 more units. I think it's something we want to do. The whole community will benefit. We all know that it's going to make us, it's something we should move forward with, I believe, and I don't think it will have a significant impact. The individuals who live there have higher incomes, so our payments would be lower. Traditionally, they would have higher incomes there, so that means our payments will be lower. It won't be a significant cost to us, so I think we should continue. I did reach out to him and asked him for his availability this week. I did not hear back, which means I will likely throw a calendar item at him as opposed to asking. So I'll just say, this is my, proposed date. Can you make it or not? Instead of waiting for him, because I would like to get that started. Okay, so software, as I was saying earlier, quickly, I'm sorry, HUD is moving to a new platform, I would say. The way that we have to communicate with them is completely unknown at this time still. All software companies are still working on how they'll be compatible with this data upload that we have to do monthly. It is a very tenuous time right now because of the political environment. People do not actually know who is compliant at this point, and we're not getting any communication from HUD. It is that reason that I do feel it would be completely irresponsible to switch to another software platform this year. I believe that Happy's on the right track and we would be compliant sooner than, or I don't want to take the risk. I know Happy software and I know that they're working on being compliant. But in order for us to shift and be compliant, our software company has to. I just think it would be irresponsible to make a move now to change software companies. I can't.
So Happy, how many Section 8 agencies are in their portfolio or their customer base? Is that a big market for them?
Yes.
So in a sense, you probably could be assured that they will be compliant.
They will be.
And
yes.
They would be, if we had them on board, and things had to change, they would be responsible for doing that and be all over it if
that's exactly
good portion of their.
correct.
So in light of that, it's still, you would recommend not switching until?
Not until I know that, not until I would see the PHA Web, which is this software company I really do want to transfer to. Until they can prove that they're compliant. I mean, HUD's starting to come down with deadlines now, saying if you're not compliant by this date, we're not going to, you're not gonna be able to upload. That worries me. I do feel it's irresponsible. That's the thought that comes into my head, is how irresponsible it would be to take that risk right now. In such an unknown time. I did receive the bill today. It is less than it normally is for whatever reason. It's $21,000 this year, which is lower than it has been in the past. Not that that makes it any easier, but compared to the other software company, which is much lower. But I think my decision is a sound one, and it would make the best. It just makes the most sense. But I would proceed with, let's get through this year and see what happens, and go from there. That's my thought. A little worried about that one, but.
Jen, with that other company that we were talking about shifting towards, are you just getting responses back from them that give you concern? Or they're saying it's on the roadmap, but it's just not here in time?
I just don't know them, and I don't, like, MRI, who's a huge umbrella of all these software companies, not PHA Web. It's a very small piece of software.
Okay.
But it's perfect for us.
Mhm.
But I just happy they're going to be compliant, whereas this other company worries me, what if they're not? And I
Have you
switched.
asked them that outright though? Like, I'm curious what their
Oh, they'll
response
be-
is when you say, this is
They're one
what
of
we
the
need.
leading people who actually starting to really make their way towards compliance. So,
The smaller.
no, that might happy. I
Gotcha.
don't know about the other one.
So when you've approached the smaller one, the one that we were going to go towards,
Mm-hmm.
that's perfect for us nearly. How do they respond to, the expectation that you have of compliance?
I did not reach out to them.
Got it. So what's given you the thought that this is not a safe path for us
I've
to go
worked
on?
with so many different software companies throughout my years.
Mhm.
And it's just, my gut tells me that. Larger MRI is extremely large, has a serious budget and has a development team like no other. Normally I don't need that because we function pretty well.
Yeah.
And we can switch to it's my gut feeling. I've worked with software companies we had one at RHA that was a smaller company like PHA Web, but they were, they were literally stealing money on the back end by rounding up everybody's payment by $1.
Huh.
And it was a proprietary software, like PHA Web, like MRI, but it just worries me because I get a smaller feel with PHA Web. Like they don't have the capacity. It comes down to capacity.
Yeah.
And we haven't contracted with them yet, have we?
Not yet, no,
Okay.
I didn't.
I don't want to speak for you,
I would like
Jennifer,
you to.
but when we talked about this issue, I think at like a higher level, it's about the HOTMA changes. And it's one thing to change software from your super robust software to like a small nimble thing when you know how it works really well and you know exactly what you need. But I don't mean to speak for you, but it sounds like you don't really know what HOTMA means and how it's really going to work. And that's what is scaring you to say, I'm going to move to this new software, but I don't know if it's really going to meet the need because I don't know
the
really
need
what
is.
the new
Yeah.
need
That
is yet.
correct. Thank you.
And that's the scary
There's
part
more
to me.
stability where we are.
Yes.
Yes, at least I
yes.
can manage this huge HOTMA shift, which is definitely coinciding, thank you. We have this huge shift, which is a disaster. HUD's a disaster. They're publishing just various bits and pieces. Nobody knows what's really supposed to be compliant at this point. It's all interrelated with the software and how we communicate with HUD, plus programmatic changes. So John is exactly correct, I have to learn these new programmatic changes with a software that I don't even know.
Yeah.
I can't, it's
That makes
too
sense.
much.
I understand
There's
that,
so many
John.
changes.
Yeah.
Thank you, Jonna.
Welcome. I heard it from you though, so.
I just don't say it like that when I'm in here.
Okay.
Thank you.
Thanks.
Okay.
Thanks, Jennifer.
Yeah.
All right. 8, old business. We have a personnel update that we have in our package here, and I would like to have a motion go into executive session to discuss.
So moved.
A second.
All in favor?
Aye.
Aye.
Then,
All right.
make sure we have that.